On this Friday, this fun Friday, this Friday full of surprises. Dovish surprise by Powell was in play. Definitely is what taking place. And markets are reacting very, very so far. Initial reaction here, very favorable. Ace pointing out, led by the Russell, which expectations were that would obviously benefit the most from lower rates. Is it guys, what's going on? What a day. What a day. Beautiful to see the positioning that has been able to ride through that wave and hold. TQQQ was able to hold into its trade, continues to hold 35% into profit. The way that CTM has been able to maneuver over the past weeks, absolutely beautiful. To see Ethereum back rising towards its high is absolutely fantastic. Cardano catching a major bid today, up 8%. And Bitcoin bull runs continues here to just doing its thing. When I say doing its thing, it's been consolidating here. Consolidation, leg up, consolidation. IBIT coming soon, guys. CTMX V4. You could see over here that IBIT earlier clicking pending long for Monday. So that's going to be variable if it's able to go ahead and Bitcoin is able to close at or near its highs today. IBIT's going to be pending long for Monday. Of course, there's a lot of weekend. That's the thing about trading any of the spot ETFs. And everything else so far, thus far, is just waiting out here on the sidelines. NVIDIA's earnings coming up next week. That's obviously a big one. I think I wanted 6 over here. I don't know what just happened. And every FNGU is not far if we're able to extend out. It's Tesla, everything getting ready here potentially to be looking to banging off on the buy side once again. And I don't know how excited I am about that. Listen, first of all, Powell, major shift in attitude. He obviously noted things like the deterioration of the job market. He did make mention of the illegals. I think he called it immigration. This year with a sharp fall off in immigration, and therefore you're seeing that in the participant. Now, I saw a video yesterday for Luke Groman, and Luke was talking about, remember in yesterday's session, we were talking about the weird dynamic that we're seeing where actually those in the labor market, their productivity is increasing. And we were just trying to figure out what that means going forward, especially with the future productivity advancements with things like AI. I've seen it myself. Actually yesterday I saw it. A good friend of mine was showing me what he was able to build last week and using cursor.ai. Now I've tried to use it, and like I'm not a dev, and but if you have someone who's a really strong dev, what they're able to do and accomplish with these tools is something that would take literally a few months within a week. So that's absolutely, the productivity is going to continue to increase. There's no doubt about it. You still need that human element in every way. And then, of course, we talked about the event. So Luke was also hitting on this same thing over here. So I found that interesting. I like being in the same realm about any type of forward thinkers that I look to as some type of vantage point. And there's no launch date. It's very soon. It's just very soon. We're right now getting right into the middle of August, very, very, very soon. And then we're looking at, so listen, did Powell say he's going to cut? No. Did he open the door for a cut in September wide open? It would be very weird to see him at this point be able to walk that back. the data that's coming out over the next month would need to be extremely favorable, pointing towards them not cutting. And the BSL revisions on September the 9th would need to be showing that no, the job market is extremely strong. Otherwise, it appears they're cutting, and now it becomes a question: are they cutting 25% or 50 basis points? Which likely becomes the next conversation as we see the data come out over the next month. And then the conversation becomes, how is the market going to react when they cut? I mean, of course, you have today, you need to see the gains held on to. And Ethereum looking good here. By the way, they are likely going to at the September meeting, they are going to stop QT. That seems reasonable at this stage of the Fed cycle. Um, we need to see that looks beautiful, Ace. We need to see the Nasdaq hold on to its gains, and so just let me get my bearings here. So did we close yesterday below we did early warning sign, purple line, and then obviously today with the news of Jackson Hole, that's faded, and it's bringing us right into this. Let me just get accurate here because I'm not. This has to be accurate for me here, and yeah, just into it. So look, we're gonna need to be able to close above this and resume up. And is that possible next week? And if you remember yesterday, we were saying I could imagine a world where the market interprets Powell's Jackson Hole event as bullish and puts in this rally that just aligns with the seasonalities. And then the question comes into September and right around the cut, I imagine when I look at like the rate cuts and you look just what's happening 1 month out, you could see that regardless if they're cutting into normalization or recession is obviously the worst of the bunch, -2%. But in panic cut, normalization cut, there's some uncertainty there. And that aligns with what the seasonalities are coming into the rest of September. And then what I have to add, what I wasn't aware of, there you go, Powell, fiscal dominant. But what I wasn't aware of was that I'm getting there because I have it somewhere, that during presidential cycles and the seasonalities, the year after a new president takes office, it seems that, well, it doesn't seems that the seasonalities are weak until about mid-October. That's that chart I was just putting up from a different view right before we got started as well. And you could see when you're looking at the post-election year, the seasonalities, they suggest that through mid-October, post-election years, that seasonalities are unfavorable. So around the time of a cut, it seems that, regardless if they're cutting into a panic, normalization, recession's worse, -2%, that there is some hesitation, uncertainty out there. And then we also have the seasonalities to factor in. And I just wanted to clarify, it was a little different than I was projecting out here until the end of September. Not that it's much different. It is different, but not that it's much different. It's slightly favorable from end of September into the middle of October. But this year, our expectations have to be a little bit more aligned with the post-election seasonalities. So the questions remain, though, and more questions come up, is around that time of the cut, how are the markets going to react? And what I was trying to paint right here is that, well, it's not like they cut and then we like watch the market's initial reaction. We're going to have another month of expectations around that time of the cut is, a lot of flat uncertainty to slightly down, coupled with the unfavorable seasonalities. So I just want a lot of people must be excited today with the market's initial reaction, but the markets are pricing that in right now today. So I don't think that they cut in September and then the markets price that in. Like the markets are pricing in that like I'll call it goodness today. And I don't think at the time of the cut, my expectation is not Fed cuts unless they surprise with a 50 basis point cut and the markets, for whatever reason, don't get shook or scared by that. So I think it's an important day to line up and talk about the macro. Wanted to make sure we did that. Bonds and initial reaction obviously are bid, but definitely still just doing nothing more than consolidating. And then I want to come back down and look at the beauty of the 2-year. And here we go. This might be the fuel it needs to get going over here. Pretty good retest we had of our area. Pretty good TA. And right now people must be pretty excited, but again, where was that? Oh, it's the 10-year. Where was this chart here? Like, we got to close above here to have that extension into next week. We got Nvidia's earnings. Market's gonna be paying close attention, and then again, as we get towards or past next week, that might be the extent of the relief rally, which I'll call it for now a relief rally. We still got lots to navigate through. Today, obviously, the biggest beneficiaries here is, well, first of all, Ethereum is leading the way strong. Ethereum looking here, maybe even while we're live, to break out to a new all-time high. If it does, someone go ahead and light up the like button, smash it, get my attention, and or let us know in the comments. Gold also reacting well today. Let me just get a look at what's going on with silver. I'll have to load this chart. No idea. Silver reacting very well over here. Look, it held our underbelly so far. Continues to hold the underbelly. Silver on its way now, potentially towards that $50 milestone. Especially, I'll call it milestone once it breaks out from it. That's the direction that we're headed. And Bitcoin here. Let's just talk about a little about what's going on with Bitcoin. So, I mean, woof. Talk about a save and a butte, intraday trading under the yellow line. What a poor placement of that yellow line. Boom, boom, boom. Do you see that? I don't even know how you do it, but either way, I mean, what a poor placement I had. Obviously, on the daily, it's held just a little test, and then you could see that our line we put in yesterday cleared and broken above, and Bitcoin here is looking good and chilling. Smash the like. No, I'm glad you guys are all here. Do we think that the next time rates are low, they will keep them low for an extended period of time due to fiscal dominance, or might fiscal dominance kick in, the easing out? I think all of this is going to lead to, so, all right. My base case continues to be that the administration is trying to run this hot, that they're going to be successful, and that 2026, and y'all know the whole alignment that we've been following when it comes to, the 1996, 1997 into 1998 into 1999, and the similarities of these two cycles are absolutely thus far extraordinarily similar. And obviously I've been looking at things like, are they, I know the Fed's been tightening for a couple of years, and they don't seem to be being able to put too much of a damper on what's happening, but monetary policy is still restrictive. I think in September meeting, QT ongoing is no longer red, right? I think as we move towards monetary policy, if they cut 25, 50 basis points, it's still restrictive. So, that could come down towards yellow. We continue to see the as we saw this week, hot. The PMIs are now turning green, right? And we're seeing lots of signs that they have the potential here to be able to extend this cycle out. And you might have seen this morning, I brought people's attention to the midterms. I think the midterms are going to be really important. That if the Democrats sweep the midterms, then I think this rally is likely going to come to a screeching halt. And if the Republicans win, I think that, or sweep, I should say, I think that it's going to continue to really run. And then if it, if it's mixed again, like it is now, well, I guess to a lesser extent, but that wouldn't be the worst outcome for what the current administration is trying to do and trying to accomplish. I'm just trying to think if I have anything of color to add over. Oh, I didn't. So I don't think I don't think rates are gonna go low. I think they're going to go lower. I don't expect them to go down towards the zero bound unless there's a crisis. And during the next crisis, and before they are able to go ahead and institute quantitative easing, they will briefly bring rates down towards the zero bound. Likely, it's not going to take them. It took them like 2 years last time to begin raising them. Likely, sharper, quicker cycles. Likely the next time is going to be much quicker than that. November 2026, D-Power, November of 2026. And likely it's going to be much quicker, but I don't expect, unless something breaks, that rates come down anywhere close to the zero bound. They're elevated right now. Let's say that, like, well, that's what's going to become interesting now. It looks like, right as of today, I would imagine market pricing in, probably 75 basis point cuts. Now, 2026 becomes very important, and the communication from the Fed going forward. But that's not for today, but that's going to be very important going forward. I don't expect that they bring rates down anywhere close to zero or keep them down there for a long time. I actually expect that. Let's just pretend they get rates down to 3.5%. I think that if they're able to succeed in running this economy strong, that inflation's going to be kicking up. If you remember yesterday, I said I imagine down the line what becomes the issue is that now Powell said I don't see the inflation. Well, you're far from your goal of 2%, so you might see it a little bit, but that if that's rising and it's clear that everyone sees it, and then going forward, the train a train running hot is eventually gonna slow down. I say snap appropriately because if it begins running hot and it becomes a legit like mega run, then the odds of a strong mean reversion become very, very, very strong, and that correction will be strong and swift when it happens. But I imagine there will come a point in time in the future when actually stagflation could become the greatest problem. We're looking ahead pretty long right now. We're trying to look into 2026, and we're using the midterm elections as a point. That's over a year from now. We normally don't look out that far. So that's where we're at. Um, MicroStrategy is it MicroStrategy inclusion, by the way. Why did I miss up twice today? First I did 3-6. MicroStrategy inclusion in the S&P 500 is coming right up, right? Um, yeah, I mean, I don't really have much to say. We failed on the launch, right? We were able to get out, navigate that. We've been on the sidelines for this. Um, I have to say, I mean, this looks good for me. If the markets are able to hold on to this momentum they have from today, and if Bitcoin is able to hold this area over here, everything is looking good. Bitcoin bull run, I mean, Bitcoin spot ETFs is not back in, but very close to becoming back in. Um, yeah, I mean, I think there's a good wake up call. I think people overreacted though, personally. 30% drawdown on MicroStrategy. That's not really worrisome whatsoever. This was a bit much bigger one. 57%. Yeah, I have no concerns, but for sure, it should really have instilled upon everyone the like the template is going to outperform anyone, and it even outperforms buy and hold, right? The whole thing is though you don't know what's going to happen in the future, and you don't know when like a big bear comes into play, and buy and hold. Everyone's an expert when the markets are going up and to the right, but when that ends, it ends badly for a lot of people. Glad you're here, especially live. That's absolutely awesome. Um, that's a great question. No, 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 like we're not in so much as that BMNR is completely young. MicroStrategy has been running here 5 years. Basic, I mean, forget MicroStrategy going back to 2000, but since they started accumulating Bitcoin, and you know, today a friend was like, "What do you think of DoorDash?" I've never heard of DoorDash. And they're like, it's this company that just IPO'd San Francisco. They're looking to flip houses. I was like, I don't do that. You know, I don't I don't buy uh CoreWeave IPO or Circle. Like that's not how I invest in the markets. I'm just looking for what I consider to be highly calculated strategic returns that happen to allow us to compete with the best of the best who's ever been in this game. So I obviously I'm a fan of what's taking place on Ethereum. I don't know if that's even a good word to say. I put out a tweet. I was like, all eyes on Ethereum. At least only those who have a passion for markets. There's a lot of Bitcoiners who like can't look at Ethereum, but for me, it plays an incredible role within the markets overall. If you're a fan of the markets, you have to appreciate how Ethereum's and what Ethereum's role is within it. Um, so it's a good question. I can't answer that at all. Uh, but if these Ethereum treasury companies are able to, Bitmine is in the market to raise 20 billion. That's a serious sum of money to be smash buying on Ethereum, and I expect that as Fed stops QE, as they continue running rates, and if this economy is able to keep going, that Ethereum is going to be obviously breaking out here to new all-time highs. So, but as far as these Ethereum treasury companies, we can't put a template to it. They're too young. We're not able to model like that. And I know that this is a lot, six, but two of these are Bitcoin plays. We have the spot ETF, and then we have strategy, and they belong within an equity portfolio. I firmly believe the rest is tech, and we don't have a Palantir template either or anything like that, and we kind of like try to be very concentrated in what it is that we use to navigate the markets. Same thing with Bitcoin and crypto. you know 4 templates are what we use to execute off of. There's a gazillion different options out there, but this is really where we focus. Are the equity markets going to be able to hold these gains, or are we looking at the Nasdaq giving back a lot to be? Bitcoin's still holding strong so far. It's too soon for me to say. I want to see us close above there to be looking at next week, continuing to be able to push this relief rally that we're calling it relief rally in play. Um, I believe that as well. Peter Thiel's got a phenomenal track record. He's took a 9.1% stake inside Bitmine, as well as another Ethereum treasury company. He's obviously, for whatever reason, believes that this is the place to be speculating himself. And speaking of speculation in Bitcoin, so is my view wrong? Why is Jordan every day asking if his view is wrong? Why why is he not certain? So by the way, I put out that fun chart. I don't know if you saw it. I want to bring it up. Come on. Load up. There we go. All right. And I was speculating out there, and imagine we stay within the sustainable channel, and then imagine I don't know if they will or not, but if in November the Republicans do sweep the midterms, then you see that euphoric rise into the end of the year, right? Breaking outside the sustainable channel. And when we break out the sustainable channel, I can imagine a mean reversion. And this could be a big pullback, 50% before then that walk up. That's obvious. I mean, that is kind of like, I don't want to say that's my base case, but that's kind of my, like, that's what I would like to see happen. How about that? But when I talk about what if I'm wrong, what's going on, what am I talking about? So I brought it up because we're just well within inside the channel, and until we break to the upside or downside, I obviously expect that continues. However, I was looking at this, and so here you have pretty close to the same thing. This is the sustainable channel, and you can see, like, let me say like this. This is a 2 week, so it's a little different. This line right here, and then the lower line is the same thing as this line right here, and then the lower line. Except of extending all the way out, you're just looking at it like that. But I've seen this, and I wonder, hey, this is a big, hat tip over to Flavorist Flav, and always so interested in Jesse Livermore's accumulation cylinder. And notice the 3 touches on the bottom, by the way, before the breakout to the top. And Jesse Livermore's Reminiscences of a Stock Operator is a fantastic one. If you haven't read or listened to the audiobook, Jesse Livermore, one of the greatest speculators of all times, no question about it. And you can see the cylinder over here. And, I live on the log, so it was not within my realm, but imagine this is what's taking place, though. All right. So let me clean this up for a moment, not to distract you too much. And then let's take a look. It's not my type of TA. I don't think it's clean. But I mean, here's the 3 touches. I don't. Is this 1 touch, 2 touch, 3 touch? Let's see what they look like over here. So this is drawn differently from Noah. And he's got 1 touch. This is in late 2023. Okay, so, oh, there you go. He's just tighter over there. 2 touches, 3 touches. It could be. I can't rule it out. I can't rule out that that's not happening. And so I really can't get it. So I never would have on my, like, this is not my type of TA whatsoever. Nevertheless, we're just like, could you imagine? Talk about hopium. This is what's called an accumulation cylinder by Jesse Livermore. And then you can see what happens when it breaks up. It just launches. Whether it's an accumulation cylinder or not, we're definitely looking at, I believe that what we're looking at here is an accumulation zone. Anytime we have been inside the sustainable channel, it has been an accumulation zone. So again, was that a cylinder back then? Let's see if we could see what that's like in 2016. See, I don't think so. I'm trying to make it work here. I want to come down and leave a little bit further. It's Fun Friday, we get to loosen up, have a little bit of fun. Nah, guys, great week. Thanks for being here each and every day, putting the work in. We had some pretty good insight into that. I can't go any. There we go. Pretty good insight into what might happen out of Jackson Hole. Indeed, it was a Dovish surprise. That was just off of yesterday and the different speakers and what they were having to say. I mean, let's see. I'm trying to make an accumulation cylinder, and that's not a cylinder. That's a channel, right? That's all I see is a channel. So I tried to make it work, sincerely, but I don't think that's what's happening. But this is and has been the accumulation zone. Accumulation, boom. Accumulation, boom. And appreciate you. What is the percent pullback if you extend the first line? Robert, I'm not on the same page because I've just been doing a bunch of stuff and I'm trying to. There's that November after the election run up. This is maybe I don't have. Well, whatever. There we go. This is that November after the election run up, that 50% drawdown, and then not only then the walk up begins. That's why it's my I don't want to say it's my base case. That is what I would like most to happen. And just because I would like it most to happen doesn't mean that it's going to happen, obviously. Nevertheless, I still would love for that to happen. And we'll see if it does or doesn't. But it seems that the macro could change rapidly from what the macro is suggesting right now, where that, like, I think that the Fed's, was it late? Was it on time? That's up for discussion. Is it going to lead to higher inflation? Yes. Do they have a choice? No. Did they make this mess themselves? Yes. Along with the help of the U.S. government just doling out money. You see the meme of Powell running the printer, and he's like, but it was also the U.S. government at the time under the Biden administration who's like, here's money for you. And like they had Oprah handing out PPI loans to everyone and then forgiving them, and then stimulus checks to everyone. And then Berkeley over in El Salvador is like, what? We're you wait, we use the dollar as our reserve currency and you're sending out stimmy checks to everyone but our people? We got to embrace Bitcoin. Made it to all-time high. Whoop, whoop. It ticked up over there. I completely believe you. I'm using TradingView all-time index over here, and we're just a little bit short here, and that caused. But the Fed was wrong for not what they had to do, obviously, in March of 2020, whether they wanted to do it or not, they had no choice. But in afterwards, continuing running $1.2 billion a month for QE for 2 years, and then keeping rates at the zero bound. And they're not the only ones wrong. Like Janet Yellen, she didn't refinance any of the debt at those rates next to zero, long-term debt. She could have easily at that time. There's a lot, like there's not one person to blame. All these people are to blame, and and like blame they deserve. They've put us in this situation where it's hard to afford the cost of living, just the basics, and especially for those that are just getting out of university, saddled with debt, working at least 40 hours a week, most of the time 2 jobs, just to make ends meet, and they can't afford just even like the groceries. Of course, there's people to him. I don't know anything. I'm not sure about. Do you think that Camel is a little too predetermined about cycles being in control? I have no idea about his view. I know he's a longtime viewer of CTM, but I don't. I follow CTM. You know. Um, how could you not follow CTM, Robert? You were looking at a line over here. Pine. Could we? That's beautiful. Thanks for that. I'm gonna enjoy that like no one's business. I'm ready for it already. Um, you wanted to move a line down. were you looking on this chart, Robert, or you wanted to? What's the percent pullback if you extend the first line? Is the bottom line the first line? Is the top line the first line, or am I just on a different chart? And we've already touched 3 times if this were indeed to be a accumulation cylinder, as per the legend Jesse Livermore's accumulation cylinder. And so you got 1 touch, 2 touch, 3 touches, and then the break above is what should and would send it. That would have, if this, I don't think this is happening. I think it's worthy of well, I don't think it's happening, but I guess that's the 1 touch. I'm trying to 2 touches, 3 touches. If this breaks up above 170, that sends it. I could see that easily if that were to happen by the end of the year, strongly aligning with what would be 4-year cycle behavior, right? If this is indeed an accumulation cylinder, and if this is going to break out over here by the end of the year, I expect if this were to break out, it sends prices. It's pretty close to my channel as far as what the breakout price would be to the upside, which makes it a little bit easier for us to navigate. So what do I mean by that? Let me just jump down over here. And so we're looking, maybe ours is even higher. So I have roughly into the end of the year, into January, $210,000 as the upper portion of my channel. And using this rough sketch I have over here, which I don't, that breaks out at 150. So I don't know, but interesting. It was the log chart. Okay. So you're looking at the log chart here, this chart here, right? And it looked like it was going to 50K. So I know which one you're talking about, I think. Forget all my chicken scratch here today. This one over here. Let me just remove this and add it back to make you. This one. That's going down to 35K. This is, I mean, I think you all know what I'm talking about. I'm not going to get into it and explain it. Yeah, I like the adoption accumulation channel much, much better. I like the name that you gave to it, and that's what it is. That's an adoption accumulation channel. Look, we don't know how long it lasts. We won't know how long it lasts. If it breaks out at any point to the upside, that is going to suggest to us we're looking for accelerated upward price behavior that is also likely going to revert down harder to the mean. That's when we'd be looking for something like a 50% correction. And then, of course, if you break below the green line, that's something new that hasn't happened in the past 12 years. And if that's happening, I have to think that something is different and this whole view of the market is completely wrong. And, I tried to have these like really wonderful conversation this week with TXMC, and, he's just expecting like 15 to 20% returns. Look, this has to be authentic as possible. I consider him a friend, and I love people that have different views than me, because then they challenge me to make sure that I'm not confused. Hold on one second. Oh, I think you said that he believes. We're looking at. Obviously, I'm interested in what's going on here. So the person says adoption can mean a lot of different things depending on who you ask. Some look at addresses, some look at Lightning, some look at ETFs. Or when I use adoption, I'm talking about the classic S curve. You can see why I'm looking at this, right? And mapping BTC milestones onto it. But yeah, I get with that context, so they're just vibes. But this is exactly, obviously, where I am on as well. Here you go, an early majority. So now we talk about, okay, this is early majority. This is kind of jumping the chasm, right? And then now we become the early majority. Oh, he said early majority down here. I don't think this is the early majority. This is early adopters from my own vantage point. And I would put right over here early adopters, and I would actually also move down this on the curve. So I have this just my own view here. Like right here is this is the chasm from early adopters to early majority, and we've just begun early majority, and you can see where it's talked about like I don't have the correct. I know Mark Moss has able to articulate this. I should be, but I'm not. Like the amount of gains that took place in X amount of time then happen in Y amount of times. That's the best I could give it. But that's pretty cool. That's a good look over there. So TXMC, yeah, that I think I said 15 to 20. 15 to 25% is what he expects over the next decade. And obviously, I expect significantly more, right? And this is where the conversation stem from. And when I look at the CAGR, and I mean, he's going off the 4-year CAGR, and he's like, well, it's 21%. And I'm like, okay, but look at the 5. Look at the 6, look at the 7, look at 8. 50%, that's close to our orange line of what the CAGR is, right? Obviously it's higher here, but if you were to average these four together, now you have 60% again. If you average these three, you have our green line, 80% CAGR, right? And the longer it runs, it's held on to that 80% CAGR. And then there's the tension between, as you could hear me talking, between is it the orange line or the green line? Because for the past 8 years, I was gonna add all these together, and for the past 8 years, it's been 50, but it's been 50 for the last 8 years. You know, now if the sustainable channel continues, and we see things like this continue for another year, and then you see that's going to mean then that the 4-year CAGR, if this were to continue for another year, which obviously defies all of Bitcoin's beliefs of what its cycle's about, but if it does, then the 4-year CAGR becomes 80%. And if it then breaks up higher, it leaves room if there's a 50% mean reversion, it stays within. So it could, I mean, I don't know that it's going to happen. It could also break down. And if we see something like, Robert, you were just bringing up this chart over here of this, and if we get a correction like this, that's when I have to change my view. Like if we break the green line and that long-term CAGR, and then of course the shorter term CAGR that I first was leaning into, at that point, if we had a correction down to here, then yeah, that changes everything. And then you are looking at a CAGR along the lines that TXMC foresees. But I can't lean into that type of view unless something changes that hasn't changed in a long time. So that's a good wrap up, actually, to a lot of things we've been talking about this week, starting on Monday. I like that. There, the beauty of Ethereum trading right now above $4,800 all-time high on the backs of the central bankster. Guys, I told you it was Powell who decides. It's not the board. It's one person. It's the chairman who decides what happens. And Powell setting up the door for a rate cut into September and beyond. The next part of the Fed cycle, QT expected to stop, and you can see Ethereum here assenting on what is an adoption event on Ethereum, in so much as that hype cycle facing reality stage is so compressed. You got I like Bitcoin's facing reality stage is massively more uncertain. But maybe, because I think Ethereum's move to proof of stake is a fatal flaw, except that you all know that I envision prices potentially going significantly higher before we ever get to that. But look at its facing reality stage is so much more compressed and tight than Bitcoin's. And what's interesting here is that you have an adoption event taking place with Ethereum, first of all, moving now towards the Bitcoin treasuries. And the next major big Ethereum adoption event could be that, like, you know, what happens if the US government, the US Treasury decides to have digital bonds on the Ethereum network? That could be and I don't say that lightly. That seems to be the direction that it's headed. And then you might understand why Peter Thiel is so interested in these Ethereum treasury companies right now. So again, that's that's I believe that's probably the base case. I got like a bit of a bit of a just nerdiness here in appreciation of Ethereum's. I'm trying to find out right now where I have a chart. Charts everywhere. But this is so messy, and this is what led me to do everything with you. And I'm just trying to figure out, and I don't even know what to put here in the middle. I'm trying to figure out like blue, that's like undervalued, uh, green, fair value, accumulate, yellow, starting to get a little bit elevated here. And then I don't know what this zone is or what color to make it. Orange is that's the top end of the deviation. Like you should be distributing. It was bought out by Brownie Brown. Like anytime that Bitcoin was towards the top end of the deviation, that's likely a time to be dollar cost averaging into our trading accounts. And anytime it's in the blue or green, I was this week talking about dollar cost averaging at 113 because to me, Bitcoin here is it's not overbought, it's not oversold either. It's slightly above what I determined to be fair value and a good long-term time to be dollar cost averaging in. But anyway, that's why this is there, and I'm glad for the quick explanation. And then I tried doing it here. Maybe this one looks better with the darker orange. That's what belongs in there. Um, anyway, I'm getting sidetracked here. And this all led to everything we've been talking about and working on. And there's the chart of what I would like to happen. And I'm trying to find a chart, if you bear with me 1 second, of the beauty of the adoption cycle. Hold on. We're gonna find it. It's right here. Right here. Guess we're not finding it. Anyway, I saw it this morning. It exists. I don't have it up right now. And the reason I wanted to bring it up was because of Ethereum to point out the difference. But Bitcoin is like hype cycle, and then it's like these wide cycles before making it out. So Ethereum here has been compressed very significant. I thought Ethereum and X settings are almost identical going back a long time. Yep. CTM Moon Boys. Thanks, Jordan. Appreciate it. All right, y'all. I'm gonna call it a Friday here. Fun Friday. And fun Friday indeed. I like guys, these sessions for me are so fun, and everything we do here is so fun. And I get it's really dispersed. And it also, like, if you're new here listening, there's a lot of ground we cover. There's a lot of information, and those that show up every day, whether replay, big shout out, or you like You have to be able to be committed. And the education, though, is priceless. And it puts you on a different level, a different playing field than everyone else around you. But it's not like presented in a 7-minute video and sensational. This is like real talk, real deal, trying to navigate and figure out markets. Kudos to you for understanding and knowing what signal is and putting in the work. CTM, enter long pending right now on the spot ETF. We'll see where it closes out as we move in towards the close today. We'll love to see Bitcoin joining the party. Everyone have a beautiful weekend. Rest up. We're back at it on Monday, and there's nothing easy about any of this. There's a lot for us to navigate going forward. And this is the question of how many stimuli checks went straight to Bitcoin. I haven't seen in a minute. We will, I guess, forever. It's becoming a permanent meme as Bitcoin continues its rise, or what that stimmy check would be worth if Bitcoin were $1 million. But anyway, guys, have a beautiful. I thought so too. I'm glad we pulled it out. And I what I liked about it also was that a lot came together that we've been kind of pulling on strings all week, starting with Monday session. If you are new here, not only subscribe, but go watch Monday session. And then you'll understand. Everyone, have a great weekend. God bless you. I'll see you all soon.